Welcome back, my friend, to the options that never end. We're right here with one of my new sweethearts, coterraenergy. I alluded to this trade in the previous episode, the previous video. If you watch the SPY trades of the day, this will be called the Triple Nipple. And as I explained before, we had a friend in high school that we nicknamed him Trip. Oh boy, Bart, don't tell these weird stories. We nicknamed him Trip because of the three nipples we had. We called him Triple Nipple, Trip for short. So there we have it. This will be the Triple Nipple trade because we're going to try to collect some dollar bills three different ways with our friend Coterra Energy. And we're going to try to do that in the next 30 days. So between now and the end of the month, and we'll try to run those numbers right here and right now if the abacus is working out properly for us to determine what the potential, now that's a key word, right? What the potential return on capital will be on this triple nipple. Because remember, when it comes to what I'm trying to accomplish on this channel and in my current position in life is cash flow. And that is my friend, right? Cash flow is king, cash is queen, and debt is the debt is the joker. So cash flow is king. We like to have the cash flowing, right? Because if you own a bunch of shares of things that don't pay you a dividend and you don't trade options on them, then you're just waiting around, right? You're just waiting around for them to go up. And then to collect any dollar bills, you have to actually sell the shares. So that part of the, most people's long-term plan doesn't work for me right now because I'm trying to determine, can I do something like this for the rest of my life? Because I enjoy this a lot. This is a lot of fun for me. Even though I'm fairly average minded as far as intelligence, I am analytical. So I love to get into the numbers. I like to put spreadsheets together, even though I have very little spreadsheet talent. I do enjoy to calculate and get the abacus out and look at fantasize about, get out the fantasy factory in my mind and think about potential profitability, returns on capital, and cash flow going out into my continued years. Because I plan to live to at least 100, so that's still a long way off, and I want to have cash flow coming in on a regular basis and also have a paid hobby. So that's a long explanation for why we're going to look at the triple nipple right here on Coterra Energy, ticker symbol CTRA, currently up today. So that that works for and against us based on this particular strategy, because I'm looking to buy 500 shares right now. We only own 100. I'm looking to buy 500 shares right now and then immediately turning around and selling five covered calls for a March 31st expiration, and it's going to be barely out of the money. So at like $26 bills. So we'll be looking to collect like 16 cents per share in appreciation on the share price between now and the end of the month. Okay, that'll be the smallest part of our return. But we're also looking, you see right here, that Coterra announced a cash dividend of 57 cents, and we need to own it prior to this ex-dividend date of March 15th. So what is today? Today is March 7th, so that's next week. So we got to get in on this if we're going to make it happen. And if we look at Coterra here, I was explaining this or showing this to you earlier. Seeking Alpha shows the dividend yield at 3.12% and a dividend of 0.20. So that would be 20 cents a quarter per share, okay? Because they do pay out quarterly dividend frequency right there. They're only at a 50% payout ratio, and they have this sweet looking 5-year growth of nearly 30% and 6 consecutive years of dividend growth. But the thing we also need to see is if we go back to the Yahoo, we'll see Yahoo, they have them at 8.12% on the dividend yield. Well, how is that? How can that be, Bart? Well, it can be because what Coterra likes to do, just like my friend Devon Energy likes to do, is they pay special. It's racing. We want to get that $26 bills so that we can sell those calls at 26. and collect some sweet premium. Of course, that premium is going to be going up right now as it already approaches 26. But it's like running right now. See, somebody knew what you were up to, Bart, and they're getting in on that triple nipple. So that's ruined my train of thought. It's not hard. Woo, woo. There's your train going right off the track. So let's look at Coterra over here on Alpha Spread. Our friends there say that Coterra is currently 37% underrated, and they give them an intrinsic value of $40.57 a share. Okay, let's go to Coterra, look at the chart just to see what these green candles are doing. They're running up on us, aren't they? Up, 25.90. Yeah, look at that. Holy moly. Somebody let the word out that I was making a triple nipple move on this. Yeah, see what's going on as well as the market is cooling off from earlier when it was trying to run real south because it was over 400 points down here on the Dow, and it's taken some of that back. In fact, let's look at the spider right now. Yeah, SPY is up over 401. We like that right now. I'd love to see 401, between 400 and 401, even up to 402 today on SPY, so we don't go near either one of our trades. So let's see. Okay, 25.90. Let's just go ahead and pull the trigger. Let's get our 500 shares going. It's going to cost us $12,947.50 right at this very moment if we were to buy those. Don't wait, or you're going to lose it. Let's see. I know you just want another couple pennies to add to the drama. There's a little red down. Can we get it for 25.90? We can put in a market order if we want, but I just want to get it filled so I can immediately trade those calls. So let's just do it. Let's buy these 500 shares for $12,952.50. So let's write that number down, $12,954 and 30 cents on that. Okay, so let's click done there, and then let's trade these options immediately. Let's go sell call. Okay, so this is a covered call, and the reason it's called covered is because we have the shares that we're going to put up on this contract. So we're going to go just over 3 weeks out, and if you can see, the 26 is trading at 50 cents a contract. Okay, so if we do try to get that 50 cents, we're going to go 5 contracts because we just bought 500 shares. In fact, let's try to get this filled at like $58 bills, like $290 right here. And when? Right now, it's 5 cents a piece. So let's go back. Let's see if we can't get 60 filled. You want to try to get 60. If it keeps running green, we'll get it filled. So it would be $300 bills for those 5 covered call contracts. And it got filled right away. So let's write that down. $300 directly. We pass go and we put the $300 directly into our pocket on the triple nipple trade, right? So what did those shares cost us exactly? Let's get the math back out. Where's that abacus? That abacus, we paid $12,954.30, excuse me. And we divide that by the 500 shares. So that was exactly like $25.90 a share. Excuse me. So based on our plan, okay, our plan is for these to be called away in 24 days. So that's only just over 3 weeks, okay? 24 days away. We're fine. We'll see what's going on with Coterra. We may roll it if it's close, but we're fine if it gets called away for $26 a share. Okay, well, that's only 10-cent profit per share. I know, but what is the key word in that sentence? Oh, you're right. It's profit. That's right. So it's cash flow. So 10 cents, right? If we go 500 shares and we multiply that by 10 cents, that's $50. Oh boy, that doesn't even pay for a week's worth of Sparkles coffee. Well, but what is it? It's dollar bills, right? It's dollar bills in our pocket. So there's $50 bills in our pocket. Now let's go over here, which is what I wanted to show you earlier on the Coterra. Okay, so Seeking Alpha shows this as 20 cents a share, right? And we just bought 500 shares. We do now own 600, but we're not using that 100 shares we already own in this equation on the triple nipple, just the 500 we just purchased. So it's 20 cents a share. That's their fixed dividend. Let's go to dividend history, and I'll show you where Yahoo comes up with their statement that, hey, look, we already made money. We already made 6 cents per share. So I would imagine with almost certainty, and again, it depends on what oil and gas, natural gas does between now and the end of March, but it will likely be that these will be called away. But, a couple of things to consider as well. Once their big dividend is paid, okay, so their 57-cent dividend, when this happens, the share price will go down by miraculously 57 cents that day. And it's because basically the company's coughing that money up to the shareholders. So essentially the math is boop, boop, boop. Now that company is worth that much less, whatever they're paying out in the total dividend, and then divided by per share by shares outstanding. So those are the things to consider. So it will go down on that day, and we'll look at it again on that day just to show that that's indeed what goes on when they go ex-dividend, because they're locking in that amount of dough that they're going to return to the shareholders. And who's the shareholders? You and I must make a pact. We want to bring that cash flow back. So if we look at this dividend, okay, so that 205 is forward dividend based on 4 quarters, so a full year of dividend payments. So you would divide that, okay, and what they're saying is they're going to pay a cash dividend at the end of this month of 57 cents a share. And then if we go back to Seeking Alpha and we click on, so right now we're on dividends, so you see the tab, that's coterraenergy, 25.97 cents a share. Hey, you've made 7 cents now per share. See how that works? And you got these tabs here. We go to dividends, and the first thing that pops up is the dividend scorecard. If we go over to dividend history, it's going to show us exactly where they come up at 57 cents for their first dividend payment of the year. And that's going to be right here. So you have their fixed dividend, okay? That's their frequency quarterly. And then the other, that's their special dividend, because they basically have a mandate within their company that they're going to return cash to shareholders. And who are the shareholders? You and I. So that's 37 cents per share special dividend. Both of those added together gets us to what Yahoo is telling us, 57 cents a share. So that'll be paid to us in our pocket by the end of the month. So if we go back to dividend scorecard, that'll tell us exactly when they first announced it. So that's the declare date where they declare their dividend. I declare a 57-cent dividend. And then an important date is this ex-dividend date, and you need to own it on a business day prior to this date in order to qualify and go on the record books right here with the company. And then they're going to pay us those dollar bills on March 30th. So that all of those factor into this triple nipple trade. So let's go back to the abacus. First, let's go back here. Let's take a look at me now, just so we can watch. It's fun just to see what they're doing. They gave a few cents back. That's okay. This isn't about the share price necessarily. This is about the cash flow. Let's go back to the abacus. So now we know they're going to pay 57 cents to us, and we're going to multiply that by 500 shares. So that's $285 bills. Now, we're going to collect that $285, and we're going to add let's add the $50 that we would collect between what we bought it at $25.90 a share, okay, and the $26 where we sold that covered call at, okay. So basically, when we sell that covered call, we are agreeing to, and we're committed to selling those 500 shares at the strike price of $26. So if it doesn't hit that $26, those shares aren't going to be called away, because on the other side of that trade, the buyer of that contract, they do not have the obligation. They have the right, but not the obligation to those 500 shares. So they don't have to exercise the contract and take possession of those 500 shares if it doesn't hit $26. Okay, and why would they? They can go straight to the market and buy it for under if it doesn't hit the $26. So the difference between our strike price of $26 and what we paid at 25.90 is 10 cents, and that's $50 based on the shares. And then we also collected $300 on selling those covered calls in premium. So we have to add the $300 bills in, right? And that equals $635. So our cash flow plan for March is $635. Now, what we need to do to determine, well, what would our gain be as far as a return on capital for this particular month? Okay, so let's round it all the way up to a month, even though it's only 24 days between now and when the shares could be potentially called away. Let's round it up to a month. So hypothetically, this type of triple nipple trade in this particular circumstance can be made 12 times a year, right? So if we take $635, which is going to be our dollar bills in our pocket, and we divide that by the capital we just invested, which was $12,954.30, and we end up with a 4.9% return on capital in 1 month. Okay, so then if we take that number, so we get 4.9%, it's not a bad return in less than 30 days, right? And we then multiply it by 12, because hypothetically we can do this trade, this style of trade with these dollar bills 12 times a year. That would be a 58 that would be nearly a 60% return on capital. Okay, now nobody's claiming that, but this is part of what I enjoy about my new paid hobby, which is stocks, options, and dividends, is these projections. What can I create? Can I be creative in these scenarios and come up with some fantasies, some fantasy islands? They're playing. If we look at this, who wouldn't take a 58.8% return on capital? We would raise our hands and say, yeah, we'll take that. Now, of course, the downside is Coterra could be like Enron, and just like one day we are cooking the books and we're worth nothing now. So all those shares would evaporate as far as their value, and we would be out that $12,954.30 less what we have returned in cash flow, which in this circumstance, in this example, is $635. Now, that type of number does pay for my wife's Starbucks bill each month. So that I feel good about. There is the triple nipple trade. Let me know in the comments below if you found this to be entertaining, if you found it to be even thought-provoking, and if any of it made sense, because what goes on in my head and what I'm able to articulate are typically two different things. So thanks for tuning in. I'll be back. I got a couple other trade ideas that I'd like to run by you today, which is Tuesday, March 7th, 2023. It's 11:34 a.m. Central Standard Time. Before I let you go, let's take another look at the spider. Let's take a look at it now. Now it's basically doing exactly what we want it to do. It's climbed back up to over 401. It seems like it's found some support at 401 as well, which gives me more breathing room on both sides of our trade that we made. So if we go back here to the Robinhood and look at those two SPY trades we made earlier, we are at 404/406 on the call. So we don't want it to go too much higher, so if it trades between 401 and 402, we'll be happy as clams. And then on the put side, which I thought I would be more nervous about the put side because of its downtrend today, with the reaction to Jay Paul's testimony before those meanies in Congress. We got a 397 on the board. So we want to be between 397 and 404 all day long. And if we are, then both of these will then expire at 100% profit. So that's what we have going on. If we look at some of our other trades that we made yesterday that were going out to the end of the week, the Qs look real good. We're already at 53% profit. Now, of course, that changes at any time. And then our SPY Iron Condor, which is basically combining these two trades, the put or the call credit spread and the put credit spread, into one trade ticket. And then it is called the the Iron Condor. So we got this Iron Condor on the board. It's only showing 8.7%. Now it's at 8.7% profit right there, but it's a pretty wide spread, as you can see, between 392 on the put side and 418 on the call side. and we are at now Tuesday, and this expires at the end of business Friday. So we got some more thoughts going forward I want to share, but for now, I've held you long enough. Thanks for tuning in. Make sure you are indeed a subscriber. Like the video, leave me some comments, and I will make sure to comment back. I'll see you in the next video.